Hi, good evening. Today is October 3rd, 2019, approximately 6:30 p.m. Eastern Standard Time. My name is Olawale Okabola, Spartacus Trading Corporation, here to bring you a recap of today's pit session trade and a prep report for tomorrow's trade, which is October 4th. I guess we can talk about today. Um, I talked about on my previous reports how important certain levels are to me. Um, One being September's low, and then the next being the rally high right here. We had some news, which all analysis is always with the caveat that, if the market trades on its own, because you cannot anticipate how the market will react to any news, or if there's a situation where there's a geopolitical um, situation going out there in the crazy world we live in. So, with that said, I was paying attention to this level, which was the rally high. Okay, got a clean chart for you. I was paying attention to the rally high. That was the number one reference to signal that if we get above this rally high and value begins to overlap this rally high, more than likely you got some shorts that were caught. I talked about the significance of September's low. So please review the prep report from this morning, being October 3rd, and the morning report from October 3rd for October 3rd, and then the prep report for that I put together that's for October 3rd as well. Okay, so with that said, the market opened and try to begin to squeeze some of the shorts. We had that ISM news, a massive liquidation came in. If you remember, I think from the morning report around the 5 minute mark, I was talking about how you need to be careful if the market is short, that the market does not come in and out of the previous day's range because we're dealing with the market that's already short. Look at this elongated profile, light volume. Yesterday, elongated profile, light volume. So the market, no doubt, was short. And there were some clues that signaled to me that this is really nothing more than daytime liquidation or short term liquidation for some clues that was left behind. I usually call them prints in the snow. So, nevertheless, we traded up through, back and forth through the previous day's range. From this ISM news and B period, it got the market short. Could not get any more continuation. We got back in range. Those people who tried to pile on, thinking that the market's weak, the market's weak, and they got caught. Everybody can see for themselves. This is a short covering rally. We won time frame higher. Near the end of the day, pulled back and closed near the high. The first clue that we had an issue, at least the shorts are going to have an issue, goes back to my report that I talked about from the third, the prep report for the third. We get back in September's low. I talked about why it's important. You see how the market responded, got right back in. It was on, meaning that we're going to threaten more than likely, more it's probable, or I would say the odds are definitely in the favor of threatening the rally high. The rally high. These folks who did not cover their shorts, and we got more shorts in today. Market profile clearly shows you what happened. Got above, squeezed the shorts. I talked about once we get above the rally high, it's nothing but light volume. The market continued to trade higher, and then we pulled back, and then the market closed above the developing value area high. So, with that said, I'm going to jump into the prep report for tomorrow, which will be October 4th pit session. To begin with, the Fed chair talks tomorrow at 2 p.m. Don't know what he's going to talk about. Don't really care, but just be aware of that. And that can bring some more volatility into the market. On the monthly, we're one time framing lower, 1 month. However, yesterday we closed outside of September's range. Now we're back within, creating a 2 month balance area, within a 3 month balance area. Nothing really changes. Well, I'll save that comment till I'm done with all the bar charts, all the time frames on the bar chart. We're still in this 10-week balance area. We're one time framing lower, 2 weeks on the weekly. Not much to talk about on the weekly. Moving on. On the daily, you know what? There is one thing. Let me back up on the weekly. We're back within, I talked about on several reports, we're back within this previous breakout and we're still in. When there's a breakout failure, part of the balance rules, you either break out and accelerate, stay within balance, break out and fail. If you fail, the destination, just the destination, is to the balance area low. So we're still in this balance. Even though we got a short cover and rally, this is a weekly um, bar chart. So within a week or so, we still could possibly test this 10-day balance area low. So be aware of that. You can get some short cover and rallies, which we did today, and that adjusts the inventory, and then the market can continue to trade in the direction it wants to go. Please be aware of that. On the daily, we're one time framing lower 2 days. Um, we're in a 2-day balance area. We want to pay attention to the 2-day half back. So just to recap, we're time framing lower on the monthly, just by a month. However, we're in a 2-week, 2-month, 3-month balance area. On the weekly, we're time framing lower 2 weeks, but we're still within a 10-week balance area. The only divergence, and on the daily, I apologize, no divergence. On the daily, we're time framing lower. We're in a 2-day balance area. So all trends are down. All trends are down, down to balancing. Nothing changes on this move to the downside unless we begin to trade above the half backs. We have one warning right now is this 2-day half back that I talked about. Well, this 2-day balance area, we got the half back, which is the halfway mark between the 2 days. You just you use it as a you use it as a gauge to determine where are we in the balance. We close clearly above the 2-day half back. This green box represents the close, as you all should know. We're clearly above that, but nothing changes to the downside momentum unless, one, first we stop one time framing lower. That's by taking out today's high. Secondly, we need to get back above these half backs. We got the 10-week half back, we got the 3-month half back, which also coincides with the gap entry. If we don't begin to trade into the gap, nothing really changes on a time frame longer than the day time frame. If we stop one time framing lower, which means that we take out today's high and we don't take out today's low, that could signal one of two things: that possible change is on the way, or the market is just still balancing. So I hope that makes sense. On a profile, we got an elongated range, 57 points, 3.5 billion shares traded on the New York Stock Exchange. That's very, very light for the range. You can expect some kind of adjustment. Also, we have a small daytime inventory imbalance where we close outside of the developing value area. Well, not developing anymore. We closed outside of the value area high. So, more than likely, we could get an adjustment to the slightly out of balance daytime inventory. However, here's the nuance: what's above is nothing but light volume. So if the market catches a bid in the overnight tomorrow, there's really nothing to stop it from trading higher. And then you have the gap entry, and then you have that signal I talked about for possible change on a time frame higher than the day time frame. So you want to be Be careful for my guys who like to short in the or not short, but who likes to trade the overnight. You know it's a daytime inventory imbalance. You probably want to short this market. Don't fall in love with your short. Okay, it'd be nice to get that liquidation, but you want to get out of this market if we begin to trade outside of today's high, because once again, there's nothing stopping the market from trading higher. The first signal of change to the downside of this market trying to go higher, the first change or the first clue to let you know that something could be on to the downside, we trade back below this mini pullback low. This is the pullback before the close. The market value, not price, but value begins to overlap, if not trade lower than this mini pullback low. We possibly could bring in some more liquidation to the downside because, again, the volume is light. You want to watch how value develops, how value elongates. If we trade back through September's low, that's a reference. That is that that goes with the monthly bar chart. It also coincides with the 2 day half back. That means we're trading below the halfway mark of yesterday and today. But you want to watch value. Don't let price fake you out. And you want to at least see value begin to develop, at least overlapping to lower. To let you know you got a decent trade. If the value is clearly lower, you know you got an awesome trade, and we could possibly go down and take out the current weekly low. So that is all I got for you. This has been a rough week for me with my analysis. Um, I took the week off last week because I had a lot going on, and now this week it obviously shows that I'm a bit rusty, getting my references crossed, but I'm back on my game. So I apologize and thank you for your patience and your prayers for those who know what is going on. All right, this is Olawale Okabola with Spartacus Trading Corporation, wishing you a good day.